Look, these are fundamentally similar and fundamentally dissimilar stories. The strongest fundamentals right now belong to Amazon and Netflix. Netflix just gave you a print in which they showed you accelerating revenue growth and expanding margins, accelerating subscriber growth, pricing power, et cetera. Right. That's about as strong a fundamental outlook as you can find in a group. At the opposite end of the spectrum is going to be Facebook, which is going to get you revenue growth deceleration and margins coming down, and it's the most controversial of the four. There's this big question about whether social media is the new big tobacco. I don't think that's going to be proven to be the case, but that's the overhang on the stock. Amazon and Google are right in the middle. And probably Google is the most consistent of these stories. They've had 20% revenue growth for well over 8.5 years. I think that's going to continue for the next several years. So that's kind of the spectrum you have fundamentally on those four stocks.
Okay, but so here's the question. Would you buy, but given where Facebook is now, is there an argument to be made that actually maybe it's undervalued?
Yeah, absolutely, Andrew, and I think you know that my answer on this one. Yeah, yes. I think it's the most attractive risk-reward play in large-cap internet, I don't know, maybe across all of tech. This thing is trading pretty close to a market multiple. And just step back. I know we're going through a lot of debate on the stock, and this company clearly has a lot of things to do to improve security on their platform, but they do own the two largest social media platforms in the world. They do own the two largest messaging applications in the world. Those last two are barely monetized. This is a company that has a very good track record of product innovation. Even though they've lost some key executives recently, the Instagram founders, they still have these assets. If they continue to innovate, this should be a stronger asset in a year or two. You have a chance here with about maybe 10% downside on the stock, 50% upside. That's the best skew I can find in large cap internet. It's our #1 pick.
Okay, is there a FANG that you think is overvalued at this point that's not worth touching?
No, I don't. Not of those four stocks. I like all four of them. I prefer, I think Facebook, at kind of close to a market multiple. I think Google trades just a few turns above a market multiple. It's a secular growth utility. The most aggressive valuations have been, and the most aggressive is Netflix. You have to be willing to look out 3 years in order to buy that stock. I'm willing to do that, but I get why a lot of shorter-term investors wouldn't want to do that. And Amazon now is increasingly kind of in the middle of the pack. They used to be kind of the most speculative of valuations, but the free cash flow is turning on that stock because of advertising, because of cloud. No, I think the valuations are reasonable on this group. I think the most compelling, though, is Facebook.
Right. Let me ask you, I'm going to take it away from FANG for a second, because the two that get lost in this conversation historically are both Twitter and Snap in the social media realm. Where do you think they land?
I can paint a lot of really negative scenarios for both of those stocks. I think the more enduring asset right now is proving to be Twitter. I worry a little bit about Twitter going into next year. If you just had Facebook warn people about the need for a major investment cycle for security reasons, platform security reasons to invest in AI, I think that announcement is going to come from Twitter. And I don't think you want to be owning that stock as it goes through that kind of investment cycle. Snapchat is far and away, of all these 6 stocks, is far and away the most speculative. And it's the one that, I hate to say it, I've got to buy on the stock, but it's the one that has the zero risk on there, in part because it's got this massive competitor in Instagram that's innovating just as quickly and maybe more quickly than Snap.
You said zero risk? What do you mean zero risk?
Oh, I'm sorry. I didn't mean to say zero risk. That's the one that has the potential zero outcome, i.e., this is a potentially deteriorating asset if they don't dramatically accelerate their product development efforts, if they don't figure out Android quickly enough, and if they don't get more of their users to start using them for their media assets, not just for the communications asset. That's the one that's got the greatest downside risk fundamentally.
Does it have the most upside at this point as well, or no?
Well, I guess so. If there's an acquisition, of all these 6 assets, the one that could potentially be acquired most likely is Snap. But I don't think that I certainly wouldn't buy the stock for that reason. And I think under that scenario, this stock could get acquired, but that's like 5 years out at like a Yahooian-like multiple. You're not going to make any money sitting around waiting for that.